What's going on, everybody? It's Takechi with the finance video, and in this video I want to help talk about how we can simplify your investing strategy so you can build wealth over time and start to invest. It doesn't have to be too complicated. It's actually pretty simple when you think about index investing. So all you need are basically three tools when it comes to get started with investing or simplifying your strategy. Number one, you need a stock mutual fund, which is basically the aggressive part of your portfolio. It's focused on the growing, but also it's a little bit more volatile, right? So it might see a lot of fluctuation in value. But again, if you're younger, you want to take some of that risk so it's growing for you. So yeah, stock mutual funds are the way to go, definitely when you're younger. Number two, we're going to have a bond mutual fund, which is basically the conservative part of your investments. It's not going to be growing as fast, but it's focused on making sure you at least maintain some of that value. All right. And then number three, ultra conservative investments, which is basically cash, something to at least hold the value. And also you can interchange between cash and also something like the conservative bond investments. All right. So 2 steps to get started with it. Number one, make sure you invest at least 10 to 15% of your income on a systematic basis, monthly, bi-weekly, whatever you have. Make sure you're at least investing 10 to 15%. If you want to go even more, you can do that because again, the more you kind of pump into the machine, the more it can return for you. But again, if you want money for other things, then that's up to your discretion, but at least 10 to 15%. And number two, make sure you focus on your asset allocation, which making sure if you're younger, at least you want to make sure more of your money is in the aggressive investments and then less of your money is inside the conservative because you're focused on growth. So for example, say you're from the age 20 to 35, you focus more on the aggressive side. 90% of your investments could be inside the aggressive part of the portfolio, your stocks, and maybe 10% can be inside the bonds. But as you get older, you're focused more on maintaining the value and making sure you're not trying to lose that value and making sure it's still growing a little bit over the time, but not focused on the growth. So example for that, say you're in your 40s to your 50s, you can start looking at things like maybe having a 60% of your investments be inside the stock mutual funds and 40% be inside the bond mutual funds. And all you have to do to make sure you have the accurate, I would say, asset allocation, you can always do a risk tolerance questionnaire on Vanguard.com just to make sure it's something that's completely to your liking and completely to your risk tolerance. And that can help you make some of those decisions. And that's basically all you have to do. Number one, 10 to 50% into your investments on a systematic basis. Number two, focus on your asset allocation. That's it. All right, if you have any questions, you can definitely do research on index investing. And also, number two, you can make sure you can look up books like Simple Path to Wealth because it talks all about this strategy, which makes things a lot more simpler. If you guys have any questions at all, please let me know. I look forward to talking to you soon.